Biden's student loan forgiveness plan is a major initiative that aims to provide relief to millions of borrowers who are struggling with the burden of student debt. The plan has three main components. First, it cancels up to $10,000 of federal student loans for borrowers who have an annual income of less than $125,000, or under $250,000 for married couples or heads of households. This applies to both undergraduate and graduate loans, but not to private loans. According to the Congressional Budget Office, this would wipe out the debt of about 45% of borrowers and reduce the debt of another 50%. Second, it cancels up to $20,000 of federal student loans for borrowers who received a Pell Grant at any point during their education. Pell Grants are need-based grants that help low-income students pay for college. This would benefit about 7.5 million borrowers, many of whom are Black, Hispanic, or first-generation college students. Third, it expands the eligibility and accessibility of the Public Service Loan Forgiveness (PSLF) program, which forgives the remaining balance of federal student loans after 10 years of qualifying payments and public service work. The plan temporarily waives some of the requirements for PSLF, such as the type of loan and repayment plan, and allows borrowers to count previous payments that were otherwise ineligible. The plan also streamlines the application process and provides more guidance and support for borrowers seeking PSLF. To qualify for Biden's student loan forgiveness plan, borrowers must meet certain criteria depending on which component they are applying for. For the $10,000 cancellation, borrowers must have an income below the specified threshold and must have borrowed their loans directly from the Department of Education or consolidated their loans into a direct consolidation loan. For the $20,000 cancellation, borrowers must have received a Pell Grant at any point during their education and must have borrowed their loans directly from the Department of Education or consolidated their loans into a direct consolidation loan. For the PSLF waiver, borrowers must have made at least 120 qualifying payments while working full-time for a qualifying employer, such as a government agency or a nonprofit organization. Biden's student loan forgiveness plan is expected to cost about $400 billion over 10 years and benefit about 95% of federal student loan borrowers. The plan is part of Biden's broader agenda to make higher education more affordable and accessible for Americans. However, the plan also faces some challenges and criticisms from various stakeholders. Some argue that the plan is too generous and unfair to those who have already paid off their loans or did not go to college. Others argue that the plan is not enough and that more radical measures are needed to address the student debt crisis. Additionally, some legal challenges have been raised against the plan, such as whether Biden has the authority to cancel student debt without congressional approval and whether the plan would harm state revenues by reducing loan repayments. Biden's student loan forgiveness plan is a historic and ambitious effort to provide relief to millions of Americans who are burdened by student debt. The plan has three main components: canceling up to $10,000 or $20,000 of federal student loans depending on income and Pell Grant status, expanding the eligibility and accessibility of the PSLF program, and streamlining the application process and providing more guidance and support for borrowers. The plan aims to make higher education more affordable and accessible for Americans, but it also faces some challenges and criticisms from various stakeholders. One of the potential benefits of student loan forgiveness is that it could lower your monthly debt payments and free up some of your income. This could have a positive impact on your ability to afford a car payment or pay off your existing car loan faster. Another possible advantage of student loan forgiveness is that it could improve your credit score by reducing your debt-to-income ratio and your credit utilization ratio. These are two important factors that lenders use to evaluate your creditworthiness and determine your interest rate on car loans. Let's look at some examples of how student loan forgiveness could affect your car payments in different scenarios. Scenario 1. You have $10,000 in federal student loans and $20,000 in private student loans. You pay $300 per month for your federal loans and $400 per month for your private loans. Your total monthly debt payment is $700. You also have a car loan of $15,000 with a monthly payment of $300 and an interest rate of 6%. Your total monthly debt payment is $1,000. If Biden's plan forgives $10,000 of your federal student loans, you would save $300 per month on your debt payments. You could use this extra money to pay off your car loan faster or save for a down payment on a new car. You would also reduce your debt-to-income ratio from 50% to 35%, which could boost your credit score and help you qualify for a lower interest rate on future car loans. Scenario 2, you have $50,000 in federal student loans and no other debt. You pay $500 per month for your federal loans. Your total monthly debt payment is $500. You also have a car loan of $25,000 with a monthly payment of $500 and an interest rate of 8%. Your total monthly debt payment is $1,000. If Biden's plan forgives $10,000 of your federal student loans, you would save $100 per month on your debt payments. You could use this extra money to pay off your car loan faster or save for a down payment on a new car. You would also reduce your credit utilization ratio from 100% to 80%, which could improve your credit score and help you qualify for a lower interest rate on future car loans. Scenario 3, you have no student loans and no other debt. You have a car loan of $30,000 with a monthly payment of $600 and an interest rate of 10%. Your total monthly debt payment is $600. If Biden's plan forgives student loans for other borrowers, you would not see any direct benefit in terms of your car payments. However, you could still benefit indirectly from the economic stimulus that student loan forgiveness could provide. For example, if more people have more disposable income and demand for cars increases, you could sell your car for a higher price or trade it in for a better deal on a new car. Alternatively, if more people have better credit scores and qualify for lower interest rates on car loans, you could refinance your car loan and lower your monthly payment or interest cost. How to apply for student loan forgiveness and what to do if you face any challenges or delays. If you are eligible for President Biden's student loan forgiveness plan, you may be wondering how to apply for it and what to do if you encounter any problems along the way. In this section, I will explain the steps you need to take to get your debt canceled and how to deal with any issues that may arise. First, you need to check if you qualify for the plan based on your income and loan type. The plan offers up to $20,000 in debt cancellation for borrowers who received Pell Grants when they went to school, and up to $10,000 for others who earn under $125,000 if they are single or under $250,000 if they are married or head of household. You can use your adjusted gross income from either 2020 or 2021 to determine your eligibility. The plan only applies to federal student loans that are held by the Department of Education, not private loans or commercial FFEL program loans. Second, you need to submit an application to the Department of Education through its website or by mail. You can find the application form and instructions on how to fill it out on the department's website. You will need to provide information such as your name, social security number, loan account number, income tax return and proof of Pell Grant receipt if applicable. You will also need to sign a consent form that allows the department to access your loan records and verify your eligibility. Third, you need to wait for the department to process your application and notify you of its decision. The department has said that it will take about 90 days to review each application and send a letter with the outcome. If your application is approved, the department will automatically cancel your eligible debt and update your loan servicer and credit bureaus accordingly. You do not need to make any payments on your loans while your application is pending or after it is approved. However, if your application is denied or delayed, you may need to take some actions to resolve the issue. Here are some possible scenarios and what you can do about them. If your application is denied because you do not meet the income or loan type criteria, you can appeal the decision by submitting additional documentation or evidence that supports your eligibility. For example, if your income has changed significantly since 2020 or 2021, you can provide a pay stub or a bank statement that shows your current income level. If you have commercial FFEL program loans that are backed by state-related nonprofit agencies, you can consolidate them into the direct lending program before applying for forgiveness. If your application is denied because of an error or missing information, you can correct the mistake and resubmit your application as soon as possible. For example, if you forgot to sign the consent form or provide proof of Pell Grant receipt, you can send those documents along with a copy of your original application form. If your application is delayed because of a court challenge or a technical glitch, you can contact the department or your loan servicer for updates and assistance. For example, if the Supreme Court blocks the plan from taking effect or if the department's website crashes due to high demand, you can call or email the department's customer service center or check its social media accounts for announcements and guidance. In conclusion, applying for student loan forgiveness under President Biden's plan is a simple process that requires filling out an application form and providing some supporting documents. However, if you face any challenges or delays along the way, you can appeal, correct or contact the relevant authorities to resolve them. By following these steps, you can take advantage of this opportunity to reduce your debt burden and improve your financial situation.